Hello, and thank you for joining us. I'm Darian Scott, Director of Economic Inclusion for the Chattanooga Area Chamber of Commerce. And today we're going to have a very informational discussion about what's needed to properly fill out applications to receive stimulus relief funding during this COVID-19 pandemic. Following the call, we'll be sending out more resources, including the resiliency checklist from the Enterprise Center. But right now, I want to turn it over to our brand new Vice President of Vice President of Economic Inclusion, LaRon Steedley.
Good evening, everyone. It's good to be here with you. My name is Lauren Steedley. I serve as Vice President for Diversity and Inclusive Growth here at the Chattanooga Area Chamber of Commerce. Just real quickly, just wanted to share with you and give some grounding as to why we're here. I mean, one of the things we've learned from the previous round of PPP support was that disproportionately during the period shortly after the pandemic started, about 41% of all Black businesses between February and April actually closed. And even a little bit more closely in line with the purpose for this particular call is roughly about 2% of Black businesses who submitted applications for PPP actually received funding compared to 83% of white businesses. So we thought here at the Chamber it was critical that we get on top of this, that we get ahead of this with the express purpose of passing on information, sharing dates, deadlines, any and all information available that we can provide. And we're fortunate tonight to have three great individuals who can share information with us. So we're going to go start with, we have with us tonight, DeJuan Jordan, Marcus Johnson, and Justin I'm going to mess it up. I knew I was going to mess it up, Justin. Groenert. I hope I'm close enough. So having said that, I was going to turn it over to one of our first panelists who's going to provide some comments, and then we'll walk our way through each panelist, and then we'll come back for a discussion.
Getting it to me, Lauren. Hi, Justin Groenert. I'm the Vice President of Public Policy here at the Chamber. So just to give you kind of a background of how we got where we got, obviously March, we saw the pandemic sort of gnarl its teeth and really sort of wreak havoc on the economy there pretty early on. Many of you are familiar with the CARES Act. That was Congress's big economic push that had a lot of key programs that we're going to talk about tonight, mainly the Paycheck Protection Program and the extension of the EIDL loan program through SBA, which is the emergency loan program that SBA houses. That, obviously got a lot of these programs off the ground. It shoved about $2 trillion through the economy at a time when the economy really needed a boost, obviously, as we're shutting down businesses temporarily and unfortunately, in more cases than we care to admit, permanently. It really helped prop up the economy in a lot of really good ways. Obviously, when we got to the summer, we thought there would be another package that would go through Congress. And Congress, as it does, deadlocked on a lot of key provisions and really never got a deal done. So we thought, most of the prognosticators thought the August recess would have been a good time to get a sort of larger package through Congress. That didn't happen. Then we sort of moved to Labor Day and thought, well, maybe we'll get something done by then. Obviously, we were kind of in the throes of an election at that point. So all in, get past Election Day, Congress decides they're going to get serious about pushing a larger deal through. Obviously, there was some election intrigue that went on with the two Senate races in Georgia, which will, I think, have a dynamic impact on a future conversation that we'll have on this topic. But at the end of the day, Congress passed $906 billion worth of additional stimulus dollars into the economy, added additional time for unemployment, extended that dropped it from $600 of additional benefit a week to $300, but pushed it out through the end of March. There were direct stimulus payments in that of $600 plus certain amounts for children as well. Those have started to go out. So if you have not received your stimulus check, you can go to IRS's website and see if you were eligible and where that payment is at. But for the most part, as it pertains to business, there were two key pieces in that. There were $325 billion that was laid out for the Paycheck Protection Program. 284 was for the Paycheck Protection Program and extended that program. It had sunset at the end of July, so there was some money still left in that account. They moved that date back out, so it is now live, taking loans again. They did change some of the parameters from the first round. They lowered the loan amount and also made sure that they tightened up the rules on size of business. So you have to have 300 or fewer employees to qualify for a paycheck protection loan. If you have not had a paycheck protection loan, the rules are essentially the same as they were the first time, with very few modifications. In certain situations, though, they actually added a provision that would allow you to get a second paycheck protection loan. You do have different rules for that, meaning you have to show additional economic hardship of 25% or more of year-over-year loss in a specific quarter to qualify for a second loan. It actually did create a $15 billion set aside for lending through community financial institutions, which I think is really important for this group as well. Set up several other programs aimed at restaurants, hospitality, outdoor venues, and some other things that I think are really important. Going down the line, obviously tomorrow is a pretty big day in our nation's history. Joe Biden will be sworn in as president. And with the two seats in Georgia flipping from Republican to Democrat, that will give the Democrats and the Republicans a 50-50 split in the Senate, which will make Chuck Schumer the majority leader and giving the Democrats the majority in the Senate, which will help, I think, in a next phase of these types of programs. President-elect Biden unleashed a $1.9 trillion plan 2 nights ago that sort of lay out what his priorities will be early in his administration. I still think there will be a lot of congressional maneuvering on that plan. I don't think it'll look much like Joe Biden had laid out there, but that's just the legislative process. But I do think we will see more money going into the economy for folks that need it, probably a little more readily than we would have if the Republicans kept the Senate. So that's a quick overview of where we are, and I'll turn it back to Lauren. And again, thanks for having me. It's great to be with you tonight.
Thanks, Justin. Next up, we're going to hear from DeJuan Jordan. DeJuan, good evening.
Good evening. Thank you for having me. Again, my name is DeJuan Jordan, and I am with Launch. I am the Director of Business Support, and with Launch, we work with business startups and entrepreneurs, primarily females and minority-owned businesses. That's our focus. And so thanks for having me again tonight. Last year, during 2020, when all of this came about, we were really concerned because there were so many businesses, minority-owned businesses specifically, who were not able to get funding when all of the funding and relief programs were released because they were not prepared. And so we did a workshop last year to try to help more businesses prepare for the different types of funding that came about. And so what I'm going to be sharing tonight is pretty much a compressed version of that workshop. And so I'm going to have to go through it really, really quickly so that we'll have time for the other speakers and for questions at the end. And so feel free to screenshot some of the slides that I am going to show. Because like I said, I'm going to go through really quickly. So let me share my screen. Okay, and so once again, what I will cover is basically the basic requirements that are needed to apply for funding for a lot of the different programs. The majority of this call will be focused on that stimulus relief money. However, I will not be talking about anything specifically as far as any of the loans or grants or any of those things. I'm just giving a general overview on what to expect and what lenders will be asking for. And so my biggest thing is prepare. Make sure that you're prepared. These are a couple of quotes that I used in the last workshop, but the one that I want to focus on is opportunity does not waste time with those who are unprepared. And as I said, last time we went through this, there were so many businesses who were not able to take advantage of the funding because they were not prepared. And so one thing I want to let you know, so in preparing to receive this funding, make sure that you're researching and reviewing your options. Don't just go out and start applying for the different grants and different loans that are available just because there's money available. Make sure that you're looking at your eligibility, your business needs, the amount of money that you need. Look at the payment terms, look at all of those things before you just go out and start applying for different things to make sure it's a good fit for you. Also, it's very important right now to connect with a banker. As you can see last time, when it was time to apply for the money, the people who were able to get the funding first were those who already had banking relationships. And so make sure you're going out and making those connections and building those relationships on the front end. Also, importance of submission deadlines versus timing of submission. It doesn't matter what the deadline is, it matters how quickly you get your application in. So regardless of what the deadline is, try to get your information in as quickly as possible. And I'm going to share with you how to do that. Make sure that you're utilizing the online services, because many people are going down and turning in applications. But by the time you get your application, get in the car and drive down, it might be 5,000 people who have applied in the time that it took you to get to the location. So make sure that you're utilizing some of those online services. Also, accuracy and proper completion of the application. Make sure that you are completing your application honestly and completely. Make sure that you're filling in all of the blanks. You're not leaving anything open. And make sure that all of your information is correct, especially your contact information. They have to be able to get in contact with you. Make sure that your contact information is the same on all of your documentation as well, or make sure that you're making a note of that and letting them know the differences. Make sure that your calculations are correct as well. And then the big question is, what will lenders be looking for? So my word of advice, and this is worth $1 million, I promise you. Make sure that you have a digital folder, because on the digital folder will make it so much easier and make the process so much faster when it's time for you to apply. And so make sure that you have a folder on your desktop or your laptop where you're holding all of the documentation that we'll talk about that you may need. And make sure you're putting everything in one folder. That way, when it's time to apply, you can just go click, upload, and be done. And this will save you a lot of stress, I promise. So what to include in your digital file? Make sure that you're using the correct formats that the applications are asking for. Most of the time it's going to be a PDF document. Make sure that you are uploading those documents in the requested formats. Also, make sure that you're checking your expiration dates of all documents to ensure that they aren't expired. Make sure that you have your business license from Hamilton County. Make sure that's up to date. Your business license from the city of Chattanooga. You will need a certificate of existence from the state of Tennessee. And I have provided that information on here. You can write down that information, the link and the phone number. That is a $20 filing fee to do that online. And then you will need things like your articles of incorporation, your EIN number. Make sure that with the EIN number, and I apologize, I know I'm going really, really fast, but I'm trying to get everything in as much as I can in. But whatever you started off applying for with your EIN number, don't switch over to your social security number. Whatever you start off with is what you need to complete the entire process. And that's from applying to post reporting. So make sure that you're using, I definitely recommend using your EIN number. Your most recent annual report, that's if you're a 501c3, you have different reports that you have to file. And then if you are an LLC or whatever kind of corporation, make sure that you're renewing all of your licenses and your documentation every year, your permits, registrations, all of those things. Make sure that you're keeping those up to date. And then on some of these applications, they're also asking for a background check. I know that that's an uncomfortable thing to talk about for some people, but that's very important that you're upfront and honest if it asks for that information. As far as financial documentation, make sure that you can use your 2019 tax return, have a 2020 P&L, profit and loss statement. Make sure that that information is generated by software. I definitely recommend making sure you have some kind of financial software that you can generate that information. Your quarterly 941s, 2020, a 1040 Schedule C. If you haven't filed it with the IRS yet, that's fine. Just make sure that if it's asking for that, that you include that information in there. Your 1099, your invoices, bank statement, or a book of record that shows that you were self-employed in 2020. One thing I definitely want to make sure that you understand is this money, these funds are not for people who are just starting businesses or someone who's trying to save their business and it was already going down. This is not for you to use the money to try to revive your business. This is money that is supposed to be used to sustain your business, to help you retain your employees. And so you will have to show documentation of your financial records prior to. And then I'm going to go through really quickly. Some of the applications, they require a current lease agreement. Some may even require a credit report. Also, I would recommend having a written COVID-19 impact statement with a description of how the business was adversely impacted by the public policies regarding the coronavirus prevention, how it affected your shutdown and reopening and the effects that had on your business. Also, a written description of how the funds will be used. You may not have to use the impact statement, but it's definitely good to have on hand because a lot of the different applications will require that. Priority will be given to applicants that can show a plan to use the funding to hire or retain workers. And then I'll just go through this quickly. Make sure that when it's time to report back, this is very important because this is where a lot of people mess up. Make sure that you understand the guidelines of the loan or the grants that you're receiving. Make sure that you're clear on how the funds can be used because you don't want to mess up your opportunity to have those loans or grants forgiven. And make sure you have clarity on what you will need to track and how to submit the information once the money is expended, and know your time frames. Sorry, once again, I know it's really quickly, but I hope that I was able to provide you with valuable information.
Thank you very much, DeJuan. Now we'll hear from Marcus Johnson. Marcus.
Hey, thanks a lot, Lauren. DeJuan, that was perfect. She provided a lot of great information. My name is Marcus Johnson. I am a small business lender with the Tennessee Valley Federal Credit Union. One of my primary goals is I run our Idea Leap loan program, which is our startup funding mechanism for small businesses and small and early stage businesses and startups that have been in business for at least 3 years and younger. We brought up to $50,000 in financing. But right now, I am over our Paycheck protection loan program, where we are trying to get our members through the system for the second round of funding. The program opened last week to a certain segment of lenders. So I have received a lot of questions on that, and it did actually open last Monday, but that was for a very small portion of the financial institutions that are participating in the program. Today is actually the first day where the vast majority of financial institutions will be submitting their applications or taking applications from their customers. One of the things that the Treasury has reiterated on a number of calls is that they firmly believe that there is enough money, that the $284 billion is enough to go around. So one of my main points that I want to make to everyone is just be patient and try to be as calm as possible. Because again, the changes that were made to the program were made with the intention of making sure that this money lasts as long as it can. On August 7th, when the program expired last year, there's about $130 billion left in the pot. I think Justin made that point earlier. And so the intent this time around is to really try to make sure that that doesn't happen again, that the program, when it's over March 31st, and that is the deadline as it stands right now, that all the money is gone. And so the SBA, in partnership with the Treasury, put in some rules to hopefully make sure that everyone gets an opportunity to access the monies that they need in order to get through the program. The other thing that I would say about this round of PPP, and I think DeJuan did a great job of illustrating it, is just making sure that you have your documentation ready. For first round borrowers or borrowers that are coming to the PPP for the very first time, you're in luck because you have the opportunity to use your 2019 taxes. 9 times out of 10, by this time, everybody should have their 2019 taxes complete. And so that's going to help you go a long way, because if you already have those tax returns saved to your desktop, or you can find them pretty quickly and scan them to yourself, that's really going to help you. The 2020 information is important, but for the vast majority of small businesses, 2019 was a much more favorable year. And so that's why the way this program is set up, even though it's 2021, you're still going to have the opportunity to use your 2019 numbers. And for businesses that were operating all of 2019, chances are those numbers are going to be much more beneficial. Now, there are going to be some circumstances where you may have opened your business midway through 2019, or maybe in the fourth quarter of 2019, and in which case, then it will probably be more advantageous for you to use your 2020 numbers, because just by default, they're probably going to be higher than one quarter of 2019. But the point is, you're going to have the opportunity, if you're a first-time borrower, to choose which year you want to use based on how the numbers play out for your organization. For returning borrowers, for the second draw, you'll also have a choice as well. You'll be able to use your 2019 numbers or your calendar year 2020 numbers. So that would mean that if you were to submit an application today on the 19th, you'll be able to use your 2020 numbers from January 19th, 2020 to January 19th, 2021. So you have a choice as well. But again, if you're a second-time borrower, chances are the bank that you went through the first time already has your 2019 information. So my opinion and my advice would be just to go with 2019. Don't make the paperwork burden any more on yourself than what it's already been. For the most part, you should only have to really submit a profit and loss statement, which will show your proof of 25% reduction in revenue, either quarter over quarter or annually. So those are my two main things, and we can certainly get into further discussion and some Q&A, but just be patient with the process, because again, the $284 billion, there should be enough to go around. It may take up to 15 days from approval to funding. So if you submit an application to your bank or a financial institution and you don't hear back right away, don't worry. That's one of the key changes that was put in place, and that was really to help offset some of the confusion and fraud and some of the other things that were happening with the first two rounds. And so the SBA has intentionally slowed down the process, so there won't be any same day approvals or next day approvals. They're doing a lot of things on the front end of this process to help offset the administrative burden on the back end. So it may not take 15 days for a lot of borrowers, but just to put that out there, it may take up to 15 days. So just be patient, have your paperwork in order, and 9 times out of 10, you should have a really good opportunity getting in on this round of funding.
And I want to make a quick point off of what Marcus just said. I think we can't underestimate the Herculean effort it took Congress to build this program basically while the jet was flying out of the sky. To pump $2 trillion into the economy essentially overnight is unheard of. And yes, there were speed bumps the first time. There were fewer speed bumps the second time. I think now that we've been through the process and they've simplified even some of the paperwork on the back end. If you've got a loan of $150,000 or less, they've streamlined that forgiveness sheet to one page. So it should be a lot smoother this time for those of you that either didn't go through the process or can qualify for a second loan. I do think you will see a much improved process this go around. So patience is key. But again, I think you're going to see a lot fewer headaches. And I think, Treasury kind of knows what they're expecting now in the rules and some other things. I think we ended up with 15 interim final rules on the first batch where they were sort of figuring out what wasn't working and changing it. I don't think we'll see that much turbulence either on the back end. So kind of what going into the process is probably what you're going to know all the way through, which I think will help as well in terms of the speed in which you get help from the government.
And to your point, Justin, about the forgiveness process and that one-page document, that is retroactive as well. So if you applied for forgiveness, or if you haven't applied for forgiveness up to December 28th, or if you applied afterwards, you are eligible to use this new document. It's a one-page form. Prior to there have been 3 versions of the forgiveness form. So this will be the 4th one for all loans under $150,000. So I just wanted to throw that out there as well, that even though it's a new form and it's coming out with this new round of funding, you are eligible to complete this shortened form if you haven't applied for forgiveness for your first loan, as long as it's under $150,000.
Yep.
All right, great stuff, guys. Great stuff, great information. I think we now want to pivot. We've had a chance to get some general overviews from our panelists tonight, and I want to thank you again, each and every one of you, very much again for being here and the information that you provided. But I just want to kind of tee us up in terms of a conversation about some of the, what can we see, what can we anticipate, some of the frequent asked questions that kind of get us going a little bit. And one of the things that kind of came to me, if you don't mind, I'm just going to jump in and hopefully this will trigger some dialogue here. It's like these first-time folks who are applying, some folks are coming away maybe with a raw taste or a thought that maybe last year or last several rounds weren't advantageous, but perhaps what could you tell them that would encourage them to understand that this particular round of funding is in fact best suited for them to move forward with their applications?
I'll jump in real quick. I think, again, I think what we saw initially with a lot of the major corporations getting money and then having to return it, I think, again, goes back to they were literally building this on the fly. And I think what you will see this time is they have really figured out how to rein in the program to get it to where it needs to go. I think another thing is the set aside, the timeframes that they're opening up for community banks and some of the sort of financial institutions that aren't big banks to access the program, which gives folks in disenfranchised areas the ability to get access to these dollars. They set aside separate funds outside of the 285 billion, whatever. There's about 15 to 20 billion that are set aside for specifically minority-owned, diverse businesses. So I think there are ways now that the federal government has looked at this program and said, we need to get it into these neighborhoods. We need to get it to these businesses. And I'll let Marcus or DeJuan jump in here. But I do think that, again, it's a learning process. And again, the speed with which they had to get this money out was really, really difficult to do. And I'll hat tip them for passing it in a bipartisan fashion and getting it off the ground as quickly as possible. But again, it's the government. And so speed bumps happened initially, and I think they learned those lessons and are really trying to do a good faith effort of getting the money where it actually needs to go.
Thanks a lot, Justin.
Yeah, and I would add to that. So some of the specific things that were put in. So the reduction in the overall number of employees that you have to have for the second round went from 500 to 300. So that cuts out some of the bigger businesses. On top of that, you have the provision, where you don't have to show proof of your reduction at the time that you apply. You can show that at the time that you apply for the PPP loan, you can show that at the time that you apply for forgiveness. So essentially it speeds up the process for the borrower, because while ideally you want to have it ready and handy to submit when you come through the loan process, you have the option to deliver that information when you actually apply for forgiveness. So that makes it a little bit easier as well. And then also they reduced the maximum loan amount from $10 million to $2 million for second-time borrowers. And then finally, like we said, last Monday, the program opened up for minority-owned depository institutions and other smaller lenders, $1 billion and under, to again be that much more intentional about getting the money out to Black-owned businesses, women-owned businesses, and other underserved communities. So this time around, I believe it's going to be very different. It's going to be a very different experience. The key thing, though, always is just having your paperwork in order, and ask questions. If you don't understand a calculation, if you don't know why your number is coming up a certain type of way. I mean, we got that a lot last time. Well, I made this, I think I should get a little bit more, or, why is this number not coming out to be this way? Ask those questions. Your lender will hopefully be in position to give you some insight as to how they're coming up with those values. But the biggest thing that you can do to really help yourself and put yourself in the driver's seat is have your documentation ready. Be ready to submit it at a moment's notice. And then again, just try to sit back and be as patient as possible. And if you happen to talk to an individual, if you're going through a bigger lender and you happen to talk to someone on the phone, get that person's name. That way, if you do need to follow up, you at least have a name to start with.
Thank you. Thank you.
Can I add to that?
Absolutely.
Thank you. More on the preparation side. I know that so many people were really stressed out last time and got discouraged, but just as stressed as you are, trust the lenders were even more stressed because it was something new for everybody. And so they had to wait on a lot of information, a lot of changes from the top down. And so don't get discouraged. Try again. But the one thing I want to emphasize that I talked about is make sure that you're completing those applications. Make sure you're not leaving anything blank. Some things that I saw last time that people weren't doing, if they didn't have the documentation or they weren't able to scan it, they just didn't submit it. And it doesn't work that way. You cannot just leave off documentation and attachments, because what happens is they're already busy, they're already overworked and stressed out. They're not going to take the time to contact you to request information. Your application will go to the bottom of the stack or get tossed. And so you do not want to miss out on a great opportunity because you had incomplete information. Also, there are lots of apps on the phone that you can use. Now, you definitely need to use your desktop and your laptop to upload the information and the documentation and to apply. However, a lot of people did not have scanners, and so they felt that they couldn't scan the information and get it in. But there are apps on your telephone, your smartphone, that you can use to scan the information, upload it to your computer. And so make sure you're utilizing some of the things, even if it's fax. There are different faxing applications and websites that you can do that on. So make sure you're utilizing all of your resources. And if you have any questions, feel free to reach out to one of us.
Thank you very much. Thank you very much. Darian, any observations or things that you wanted to raise?
We actually have a question in the chat. I think this would be for Justin. It says, if my company has received some money in the past, can it qualify for the second round of stimulus?
Yes, I think it depends on what program they used. So if they used an EIDL loan, let's say, and Marcus, you can jump in here too and correct me when I get this partially wrong. I'm a policy guy, not a banker, but so essentially EIDL had a program where there was a $10,000 basically loan or grant they gave out as part of an EIDL emergency loan, which was a low interest loan. As that money started to dry up though, you could get an EIDL loan and a PPP loan. You just couldn't use the money for the same stuff. But what they did was they took either part of the $10,000, well, they took the $10,000 off of what you could get reimbursed on your PPP loan. And then because money was starting to dry up, they actually tightened up how much of that $10,000 they were giving away as grants. So in the scenario that you went after the EIDL money and you didn't get your full $10,000 grant, you can go back and apply for the rest of that $10,000 grant. The $10,000 no longer comes off of your PPP loan. So if you got a $150,000 loan and you had an EIDL loan originally, you would have only been able to write off $140,000 of your PPP loan into a grant. Now you can do both and you're not penalized either way. If they got a Paycheck Protection loan the first time, there is a second loan option. Again, the numbers are different, and you have to show a 25% loss quarter over quarter from the previous year or as a whole for the year of 2020. So there are some options. Again, it just kind of depends on your specific situation as to which programs in terms of the stimulus programs you use, but there are options out there for you to get help if you need it.
And I'll just add to that in terms of the 25% loss. If you're a sole proprietor, you don't have any employees, it's just you. That's gross revenue. So that's going to be on your Schedule C, your top line number on your Schedule C. That's the number that we're going to compare your 2019 top line number to whatever your 2020 number is that you provide on your P&L statement. Or if you're a sole proprietor and you don't have a profit and loss statement, then what I would advise you to do is get in contact, with your CPA or begin to prepare your tax returns, because unfortunately, as the rules are currently written, there isn't really a lot of guidance specifically to sole proprietors in terms of what other ways you can calculate your numbers if you don't have a P&L. And that might be a good bit of advice for anyone that is a sole proprietor right now, is that even though it is just you, it may be a good idea to get into the habit of actually having a quarterly report on yourself. If you are a barber, or if you have a food truck, or if you do anything and it's just you and you don't have a set of employees, you still can keep track of the revenue that you generate on a quarterly basis. But just wanted to throw that out there. If you're a sole proprietor, if you have your 2019 taxes, and if you're coming around for funding for the second time, then the number that we're going to use for the baseline is your Schedule C, your top line gross revenue number, and we're going to base your 25% reduction off of that, and that's what you're going to have to show.
Hey, Marcus, we have another question in the chat. I think this will be directed towards you. The question is, do churches qualify for the PPP loan? If so, is the process the same as a small business?
Yes, churches do qualify for the PPP loan, and the process is the same. The documentation, obviously churches don't file tax returns, and so what we would require, what you want to be able to present to your bank or lending institution, is just your 2020 revenue numbers, however you track that. If your church has a payroll, you are going to have 941, so you will need to provide that to your lending institution. You're also going to need to provide proof if you compensate your pastor for housing or any other benefits. You're going to want to show proof of that. If you provide insurance or any type of benefit for your employees of the church, you're going to need to provide that. But yes, churches are eligible to apply, and the guidelines are similar, not exactly the same, because the documentation is going to be required for religious organizations is going to be a bit different, but you still should be able to provide it. Yes.
Thanks a lot, Marcus. I really appreciate it. We do have a little bit more time, and I thought it was some documents that DeJuan was going through, and I wanted to also just maybe there are one or two things, DeJuan, that you felt that maybe we need to place a little bit more attention on, just to make sure folks got that information.
I would just make sure that your information is up to date. I think that a lot of times people have the information in the binders or wherever they have it, and they feel like they're already prepared, but then when they go to submit it, they realize it's expired. So making sure that your documents are up to date, not just checking it off the list to make sure you have it, but that they're all current. I also recommend not only the digital thing, the digital folder, that's very, very, very key, but I also recommend having a physical binder as well with all of those documents. And even if you don't need all of the information that I gave for certain loans or grants that you're applying for, as a business owner, it's important that you have that information anyway on your business. So it's not something that you just need to apply for these grants and these loans. This is something that you need to have organizationally, period.
Got you. Well, thank you. Thank you very much. Also, just ask some general questions. Well, there are frequently asked questions that come to mind. Like, Marcus, as you are going through this process, are you finding that folks who are seeking to complete applications, same question to you, DeJuan, are you finding that folks if it's some misinformation or how they're going about even identifying financial institutions by which to do work with, if there are other funding sources out there that could be useful for this process, do you guys recommend, or is there some commonality of frequent asked questions?
Yeah, so I think today, what I heard the most was, how do I calculate my 25% reduction? Because we're serving a lot of our second round borrowers, and the question surrounding that was, how do I know whether to choose my quarterly or whether to choose annually? And so again, if you're a second round borrower, it's your choice. You can choose whether or not you want to show your 25% reduction on the annual basis, or whether you want to show it on the quarterly basis. And it only has to be one quarter. Doesn't have to be the entire quarter. So if you experienced a 25% reduction in the second quarter of 2020, when we were really in the shutdowns, and then in the third and fourth quarter, your revenue shot up by 100%, you still qualify. You do not have to show a 25% reduction every single quarter, just one quarter. As long as you're comparing it to the same quarter in 2019, then you're fine. And again, for those businesses that weren't in business all of 2019, and let's say you were in business only the fourth quarter of 2019, but you also experienced a 25% quarterly reduction, as long as that 25% reduction is compared to the quarter that you were in business in 2019, you're good to go. So that was one of the biggest questions that we had today. And then for first-time borrowers, again, I can't reiterate enough that you can use your 2019 tax information to apply. Your 2020 information is important, but you don't necessarily need to provide that at the time of application. You may have to provide that when you apply for forgiveness. And the forgiveness process, just so everyone knows, you're going to have a covered period. And your covered period is essentially the amount of time that you have to spend the money. You have anywhere from 8 to 24 weeks to spend the money on the covered expenses. 60% of it has to go to payroll. 40% of it can be used for other expenses. And the other expenses category has been opened up greatly from what was included last time. Last time, you could only really use it on a mortgage interest, rent and lease payments. Now you can use it on working capital. You can use it on other debt that was required. You can use it on paying if your business was damaged for some reason due to some of the protests and things that were going on last year. You can use it to fix up your business. So there's a lot of other things that you can use it on, but the 60% rule still applies. And if you're a sole proprietor, it's going to be easy for you to meet that rule, because the moment you get the money from the bank, you are the payroll. So the moment that money's deposited into your account, boom, you've immediately met the 60% criteria. I normally tell my customers, if you can spend all the money on payroll, save yourself the headache, spend it all on payroll. Don't bother trying to piecemeal it and spend a little bit here, spend a little bit there. If you actually can spend it all on payroll, it'll be much easier to track if you did it that way. So I guess it's a long-winded answer to your question, but it's normally around, how do I get my 25% reduction, and what information do I need if I'm a sole proprietor and I don't have any employees? And then the final thing I'll say with regards to what institutions to go to, start with your primary bank. Whoever you have your bank account, your business bank account with currently, if you're a first-time borrower, whoever you have your business bank account with currently, start there, because at the very least, they already have your basic information, your name, your social security number, your address, your date of birth, all the basic stuff. So you can bypass having to do that with another institution. And then also, if you receive the PPP loan from one institution, it's probably best for you to go back. I did get some questions about that. Some folks use online lenders and they would prefer to use another institution. You can do that. There's nothing in the rules that says that you can't. But again, that just means that you have to provide all that information all over again. And the best thing you can do for yourself is try to make this process as easy as possible. And those are some of the things that you can do. Sticking with your current lender. And if you're having issues getting through to somebody or getting questions answered, then by all means, you can seek out other resources. But I would certainly advise to start with your current banking relationship.
Thank you very much. Thank you very much. Darian, do we have any other questions there?
Yes, we do. We have one just come in. It says, how does it work if your business was started in 2020 and you work alone? So I'm assuming they're a sole proprietor.
So you have to be in business by February 15th or before. If you open after February 15th, 2020, you are not eligible to receive PPP money.
Understood. So are there, go ahead, Darren, you about to say something?
Now, I actually was going to ask Marcus, if a person has like a franchise with multiple locations, would they apply for each location or would they apply for one big loan?
You can apply for each location just as long as that location falls under the minimum employee restrictions, which is 300.
Thank you.
I guess I just had a general question. This came to mind. So Justin, earlier on, you mentioned that the new administration is going to probably come in again with somewhat of extended resources. Would monies for business in this context be similar, or there be a second round of this, or is the expectation this is going to be it?
I don't 100% know the answer to that, but it does seem to me that the Paycheck Protection Program is the sort of flagship program that came out of the CARES Act.
Okay.
So I think in terms of small business relief, this is going to be the model from here on out.
Gotcha.
I don't think they're going to go through the process of building a new program and going through all the hiccups. I think the fight at this point going forward is going to be how much money and where are they allocating it going forward. So I do think as the economy still sort of drags out in this pandemic, hopefully we're on the sort of backside of it.
Sure.
As more vaccines come online, as more people sort of feel more comfortable with where we are and the numbers are going down, hopefully we're on the back end of this and we don't need another round of paycheck protection money. But at the end of the day, there's still going to be a whole lot of economic activity that's going to need to happen between now and the end of 2020 or 2021. So my guess would be that this will be the vehicle. This and the EIDL program through SBA will be the two vehicles that we will see. So I do think there will be continuity in that regard. I think the question will be how much more money will go into the well, one, how is the money utilized this go around? What is the impact of that in terms of jobs, in terms of business startups, in terms of businesses staying alive through this sort of protracted, sort of stagnant economy? And then what's the need going forward? And I think that'll be what decides what comes next, not so much the vehicle with which they use.
Got you. Thank you very much. Thank you very much. So guys, I think we've had a conversation, had a couple of questions addressed. It's coming from all sides of this, the actual legislation to the application process, frequently asked questions, the process for which you go about to complete applications, deadlines associated with the program itself. Were there any other comments or questions that you guys want to lift up and let the audience know that you think they should know about before we sign off?
Well, I have something, and I don't want to, it's so positive, and I don't want to be the bearer of bad news or bring up anything negative, but I think it's very important to say, every day that you turn on the news, you're seeing where people are now being charged for misappropriating these funds. and creating companies and doing things that aren't really legal with this money, because it is so much easier to get than a regular loan. And so, unfortunately, I don't believe anybody on here would do that. However, there are those bad apples who have taken advantage and who have not done right by the system, and they're going to pay for it. And some of them are already paying for it. So I would just say, make sure that once again, you're being honest on your applications, not trying to create, not trying to revive a business, but actually using the money for what you say you're going to use it for, and make sure that you're doing everything properly, decent, and in order. And so I just wanted to make sure I brought that up.
And I'm glad you did bring that up, DeJuan, because that puts another thought in my head. You will need to keep your records for 5 years. With this shortened forgiveness application, we're expecting for it to be 1 pager, like Justin said, few questions, maybe 4 at the most. So nothing extensive. But at any given moment for the next 5 years, the SBA can reach out to your lender and say, hey, Mr. Lender, we want you to reach back out to customer Z and get their information. And so even though the forgiveness process they're going to try to make it easy, please hold on to all of your documentation, because in 2025, you could get an email or a phone call or a letter from your bank requesting that you turn over information, or the SBA may send you a notice directly. We don't know if that's really going to happen, but it is in the disclosures and it is in the rules. So please keep all of your documentation handy. I know that may sound, a bit crazy, but better safe than sorry. So I'm glad you brought that up, DeJuan, because you want to make sure that you keep everything. And again, and the other thing, to your point, that's why they've slowed down the approval process. And this time around, they are not providing same day approvals. There was a lot of fraud that went on, and it was very clear that they wanted to do everything in their power to mitigate some of that. So that means that all of the honest folks are going to have to wait a little bit longer for funding. So thanks for bringing that up, DeJuan.
Thank you both. Any other comments or questions or observations based on our discussion tonight?
Lauren, I definitely want to put this in. I spoke with Deb Social from the Enterprise Center earlier, and she dropped this in the Q&A. The Enterprise Center has created a resource to help people figure out how to get this information easily. It's the Resilient Checklist. So please log on to the Enterprise Center's website, go to the Resilient Checklist to get more information, get everything in one spot.
Awesome. And also too, as just by way of summary of today's conversation, I think you're going to begin to see this, put this out to everyone. Just pay close attention and ongoing collecting of information related to pursuit of this PPP funding. Definitely see the Chamber as a resource. If we can in some ways direct you to sources, folks who have been a part of the panel are, again, just excellent resources, information that you may need or questions that you may have. These are great folks by which to reach out to locally who can assist with that information. The Chamber will continue to put out information as it relates to PPP and what's going on with some of these dollars that are going to be put out. And as we pointed out at the very outset, the whole reason we got engaged in some of this work has been part because we realized, and this came up throughout this evening's conversation, some of it's just lack of information, not having proper documentation, not knowing where to go if you had questions, and then not being able to succeed in garnering funding through the program. So we're really trying to be conscientious about and present about being a partner in aiding in this effort. So having said that, I pretty much bringing close to our program tonight, but just a couple of closing things. I want to thank each and every one of our participants tonight, the panelists. Also, I want to thank each and every one of you that took the time out of your busy days to join us for this call. And if you have any questions or comments with regards to tonight's program, please don't hesitate to reach out to either myself or Lauren Steedley or Darian Scott here at the Chamber. Justin as well. We don't get the pronunciation of his last name because I know I'm gonna hear that at the staff meeting next week for sure. So I just want to thank you all, one and all. And then before we sign off, again, we're going to continue as part of as I mentioned at the outset, I serve as Vice President for Diversity and Inclusive Growth here at the Chamber. And periodically we have, and try to do this quarterly, events that come up to support sort of information, education, and growth of this particular body of work. And we have a session coming up on February 17th, February 17th at 10 a.m. It's going to be part of our DEI forum. In terms of the particular topic, we'll let that information be known to you in the coming weeks. So on behalf of the Chamber, but on behalf of each and every one of our guests tonight, I just want to thank you for taking the time to join us. And I hope you guys have a very fruitful and productive new year. Stay healthy out there. Thank you very much. Good night.
Bye-bye. Thank you.
Guys.
Thank you.
All right, guys.